Fully. Okay. So, guys, as you know, we have been. Let's hit that button as it goes. Let's hit that as well. As you know, we've been trading GU. All right, we've been trading GU for about 2 weeks, and we're going to look around some other pairs also, see if we can see some great opportunities, some 10 out of 10 opportunities. All right. As you can see, guys, the strategy is powerful because it's market structure and price action. Okay, it's very simple and it's effective. All right, because ultimately it's how all markets move. Now, if we understand the basics are this. The basics are that we like to sell when prices are expensive, and we want to buy when prices are cheap. We want to do that in life, in all walks of life. That's what we're interested in doing. We're interested in selling when things are expensive. If you was, if you had a box of, iPhones and the price went up, and we're interested in buying, okay, when prices are cheap. But ultimately, right now, my bias in this market is that the market is a bearish market, meaning that it's making lower lows and lower highs and lower lows and lower highs. I'd like to see a lower low. That's what I'd like to see. Now, this market has made a retracement back into these levels, and we're going to have a look. But ultimately, what I also understand is that this top end of my trend line is my buy area. Is my location that I'm interested in buying. Selling, sorry, is my sell area, apologies. I'm interested in selling. I'm interested in selling from the top of these ranges. This would have been a great place that I sold from. This would have been a great place that I sold from. Yeah, this would have been a great place right now to sell from. Okay, now that's where we start our 10 out of 10. That's where we start our top of the top trades. Right at the top there, thinking to ourselves, that is a real top of top trade from up in that level. Okay, now let me touch this down a little bit more. A bit loud for me. All right, now that doesn't mean that we can just hit the button, because this is a weekly chart. All right, I'm looking at a weekly chart and I'm identifying that area over there. Okay, and as we can see, the market on its daily structure was making, because this is a bit more relevant to us. All right, on a daily structure, this market was making some higher highs and some higher lows. Yeah, it was rocketing up in this direction. Yeah, higher highs, higher lows, higher highs. And what a coincidence that the market came straight in and touched our little line over here. Guys, I'm going to make this line thicker so we identify that hard stop. Touched our line, and then it just turned around. What a coincidence. And started breaking daily structure. Now, what do I mean by that? I mean, here's a daily swing low. Here's another daily swing low. The market hammered past there, and then now we're seeing a retracement back into these levels. Now, I honestly was looking at this retracement levels and hoping that it was going to turn around in the 50% area of that retracement, around this level here. Okay, because over here we saw the 50% level and we saw some areas of interest, but understand that 50% level, that green line you can see, dotted line, dashed line, is an area of interest where we can see prices where the market likes prices. It did like prices, but also like prices around here and here and here and here and over here. It's an area. Have a look. It's an area of interest. All right, around this level, and we have seen that push a little bit further than I would want it to push. However, I'm looking for this market to turn around. I'm still looking for this market to turn around here. However, the market is bullish on a daily time frame. All right, because have a look, the market pushed down here on our daily. Okay, making some lower lows and some lower highs. Yep. And then the market's been making this retracement that we was trading for the last couple of weeks. All right, all the way up into this level. Fantastic call a couple of weeks ago, and we traded that, made great profits up into here. You guys saw that in the group, okay? But right now, even though this market is still bullish, making higher highs and higher highs, see how we're getting tighter. Yeah, this range is getting tight. If I can do this, look, I'm gonna do this, and I'm gonna do this. Yeah, it's getting tighter and tighter in here. All right. And if I could even, draw a better bottom line here, bottom end, looking something like this, a bit more the energy is, even if I want to do it even better than that, let's take it from here. This is on a 4-hour time frame. I'm trying to draw a better bottom end, okay? Like so. Like so. So I'm gonna make these a different color, okay? I'm gonna make these a different color so we can identify them. Lots of white lines in there. Let's go yellow. All right. And let's even go solid. How about that? All right. So that market's in here at the moment, right up on our 618. And at the moment, it's actually going sideways, right on our 618 line. Okay. So instead of it being a 50% retracement, it's like the market's pushed a little bit further than we really thought it was going to retrace, and it's dancing on this 618 line. This is consolidation on the hour time frame. It's the market is trading within this point and this point. The market's in that range. Yeah? And within that range, it's consolidating even some more. If I drop my time frame down to my 15-minute time frame, you'll see it some more. Look, even within that range, the market's doing the next bit of consolidation. Okay, like it was in here. Okay, it was in here. Just seen it it pushed over here. We just seen it going over here. But to be perfectly honest, I really don't want to get involved in this trade. Here, somebody tell me why I don't want to get involved in this trade right here where we are. Tell me why I'm not overly interested in getting involved in this trade right now. Somebody knows. Somebody knows why I'm not overly interested in getting involved in this trade right now at this minute. Nobody knows?
Consolidation.
Consolidation, but also if we're talking about ranges, what do I want to do at the top of the range? What do I want to do at the bottom of the range?
Yeah, you want to sell. You want to sell at top of the range and buy at the bottom of the range.
And at the middle of the range, I want to do absolutely nothing. And at the moment, I've just said that this range is here. 1 second, let me turn off my alerts. Going berserk over here. This range is this blue box. This market's trading within this range at the moment, in this blue box. Can you see that? And we're in the middle of that range. Look at the middle. Look, if I decided to take a sell here, look, no, we're going up. Oh, we're going up. No, we're going down. No, we're going up. No, we're going down. No, we're going up. It's in the middle of the range. I do not want to get involved in there. This is the area that's going to chop up their traders. Worst case scenario, if I was trading wanting to trade this consolidation range, worst case scenario, that I was really interested in trading this consolidation, just like any other range, I'd be selling from the top of the range and I'd be buying from the bottom of the range. And if I bought from the bottom of the range, I'd be good. I'd be good. I'd be good. And if I sold from the top of the range, I'd be good. I'd be good. But in the middle of the range, I don't want to do nothing in the middle of the range. Now we could open these up a bit. Obviously, I've made them. It's split into thirds. All right, it's split into thirds. You know, something more, say, like looking like this. All right, into thirds. But either way, you get my point. Right now, right now, I don't want to get involved now. I also don't want to get involved because in this trend that I drew, this yellow line, we're still wearing baggy jeans. We are still within that yellow trend. That yellow line, we're still wearing baggy jeans. I ultimately want to see it break outside of the baggy jeans and start doing something else. Then I'm like, okay, we're doing something else. But at the moment, for all I know, we're still in here and it's going to decide to, touch this yellow line and keep going up in here. I don't really know. I don't have a clue. But right now, my biggest concern and my biggest issue is that we are ultimately trading in the middle of a range. All right. In fact, can I redo. All right, no problem. We're in the middle of this range. I'm not interested. I'm sorry, I'm not interested. And you can already see I've got my alerts in. Look, I've already put my alerts in. When that, get rid of the other ones, because I've got a hell of alerts in there. Delete you. Just delete you. Yes, please. Just delete you. I've got, like I said to you, you can see those other alerts around that range. Sitting around that range. That I want an alert when it does something. I don't know what it's going to go and do. I have a bias because I want to sell this market. I'm expecting it to turn around right now. I'm thinking maybe there's going to be a liquidity grab, very possible. Nam. And then we might see this market doing this. It's very, very possible we see that playing out. Okay. But ultimately, right now, I'm easy. Yeah, I am easy right now. with GU. I don't know. Okay, so I could get involved. I might make some profits. I might do something. I might, who knows? I might catch it from here and it might get. But it's a bit like, yeah, it's unnecessary of me getting involved in it. It's unnecessary. Okay. Yeah, that's what I'm saying about that. So I've got my alerts in there, and I hope you understand this. Now, look, we can start playing this back and let you guys understand how powerful the strategy is and how we take these trades. Okay. In fact, let's just do it on a brand new chart. All right, this one's fine. I'm going to leave this for now. I've got my alerts in. Let me get rid of this. Don't want to see that one there. We can get rid of our dots also. All right, we're going to leave this market right now. If our alerts ring in the session, then fantastic. If it doesn't, it doesn't. All right, we keep an eye on it for the rest of the day. Okay. Let's go have a look at another pair. I'll look at EJ. All right, I'm going to go on our daily time frame. Have a look. Have a look at the same logic, all right? And I'm not going to do here's one I made earlier. We're going to delete everything off our charts and let you understand if you are trading, this is where your foundations start. This is your fundamentals, okay? Now, we're looking and seeing what this market's been doing. Look, this market has been trading within this range. Yeah? The market has been trading within this range, okay? Let me do that. Let me do this. Let me do, let's give it a color. This, that. The market has been trading within this range, within this box. Yes, it has. But within that box, we've been making it bearish, bullish, a little bit bearish here, okay? And then at the moment, we've been going on this wild impulse. We know that EJ has been bullish, okay? Now, the reason I went all the way out there and drew this box is just to show you that that all-time high is a level. And there's definitely liquidity sitting outside of that level. Liquidity, a pool of funds where people have, placed their stop losses. And it was like, yeah, up here, nothing can break up this level here. It's impenetrable. Yeah. And the market loves that. When a herd of people start saying that over here, they don't think anything's going to break past it. The market loves it when it feels like it will go and prove you wrong and go nam, 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 and eat up all of those stop losses before it decides to do something. But as we can see, if I go to my daily time frame, we can see that since, going all the way back down here to March 2022, we can see that this market has been bullish, making higher highs and higher lows and higher highs and higher lows. And there's even certain points we see the market going sideways kind of in here with some sideways action. Then the market broke outside of there, made a higher high and made a higher low. And right now on the daily time frame, let's scoot down some more, okay? Because I'm showing you this market structure, okay? So if I touch some lines in here, have a look, I'm touching some data points. All right, the data points I'm touching is 1, 2, 3 in here. I'm saying that the market made a little impulse run in this level here. That's what I'm saying to myself, okay? Because I'm just letting my eye understand what's going on. When I drop my time frame down, it makes it a bit clearer. See? See, when I drop my time frame down, I think we can all agree the market was doing something like this. Yeah, in this kind of energy in here. Now remember, these lines are just lines I've drawn on my trading view. You understand? They are not dictating what the market's going to go and do. They are giving me information so I can quite clearly identify which way the markets are going and what's been happening. Like, for example, now I can see that this price has broken outside of the market. All of a sudden, people are wearing baggy jeans. The trend's changing. Not only is it broken outside the market, it's broken this swing low structure over here. Okay. So I'm looking at it, I'm thinking to myself, something might be going on. Something may be happening in this market. This market might be doing something. Okay. Because it's not only price, it's not only broken outside of this level, it's also broken structure here. Okay. So on the 4-hour time frame, remember, every single one of these candles are 4 hours in time. Quite substantial for us as day traders. All right. So if we do this, let me give it a different color. This market has been pushing down in this impulse. Can you see market structure? How I'm just drawing it constantly, connecting the dots. If I was to draw the other ones, I'd be drawing this one in here, this one in here, and this one in here. Yeah. So the whole point is this. Let's get back to our Let's get back to our thesis. Our thesis is that we want to do, even though we've broken structure over here, and broken this level, I'm still a little bit concerned. What am I concerned about? What am I concerned about just jumping in the sell right now? I'm going to give you a clue. What am I concerned about based upon what I've been slapping on this morning? I've made a little theme this morning of where we want to buy and where we want to sell. Why ain't I just jumping in the sell right now? Now I've seen that structure being broken. Why am I not just jumping in the sell? Now I've seen this structure being broken. Somebody knows.
Because you're at the bottom of that range.
I'm at the bottom of the range, Tam. Good morning, darling. And I'm a bit concerned. I'm a little bit concerned, even though we've broken that structure, that this market. Have a look at it. I'm going to use this area. It's not the best area, but from here, I'm going to pull from here to here. This is my Fibonacci. How this market kicked all the way back up in here past the 618. Which I'm not going to use that one because we're still in the trend. All right, it's no point me using that one. I'm going to use a different example. Use a different example from historic example. Let's just use it on a bullish impulse. Okay, let's use it on the bullish impulse. Have a look. From here to here, this market came and retraced back into our little golden area, which is essentially our 50% line. All right, so I'm going to get rid of these other lines just so it's less to look at, but it just shows that, like I said to you, that 50% level is an area. Look at the market on this impulse, retraced, boom, back into this level and pushed up. Have a look at this bigger impulse over here. From this here to here, and the market pushed up here and then retraced back to 50% area. Now this is changing. The reason I'm showing you that is maybe that's going to do that on the flip side, on the other side of the coin, bearishly. So maybe now we've broken some structure and pushed down here. I don't know where this is going to end. This might push down further. I don't know. But for argument's sake, we're at the bottom of the range. And I'm a bit concerned about hitting that sell because maybe the market, let's imagine that it stops down here. Maybe the market decides that as it was doing on the way up, it wants to do this. Back up into this 50% level. And back into an area whereby I'm interested in doing what? What I'll be interested in doing over here?
Selling.
Exactly. So as much as this market is broken and pushed down here and broken this structure, it's shown me something where I'm like, okay, maybe this market now wants to try and do that energy. But ultimately, I'm a little bit concerned that we might go into some retracement now, even though the market now wants to continue coming down bearish. Maybe it does. All right. So personally, I wouldn't be trying to sell this now just because we've broken this structure. Personally. Now we can go down to our time frame and get more detail. But personally, nah, not for me. Now, how have I got this angle down here of this bottom of the range? Well, I've just taken this data point and this data point, and I pulled out a parallel line. Now, that may change. And when new data comes out, what do? You update your spreadsheet. You update your information when new data comes out. But I ain't got new data. So I've only got the data what I have. And the data what I have right now is this data point, this swing high, and this data point. And I pulled out a parallel line, touched it on this data point, and it's giving me this range that we're trading within. And as much as all the newbie traders and the YouTube traders are getting excited, oh, we've broken the range, fantastic, and they're getting excited. Let me tell you something. You might even see this happen. Have a look. This could happen. Market comes back in here, taps into this level, pushes down. And man, they get excited now, think to themselves, yep, it's going to hell. And then it just decides to do this. Maybe, can you see this imbalance over here? Maybe into here. Okay. Before it says, okay, now we're going to go. Now, when I get in here now, on a smaller time frame, maybe a 15-minute time frame, maybe a 5-minute time frame, when I see a breaker structure, I don't know what type of structure this is. This is like the drunkest markets we've ever seen, but it is what it is. When this market starts breaking structure in a 15-minute time frame, I get in, my target will be here. Let me make that thicker. Because ultimately, this market should be doing what? Making lower lows, lower highs, lower lows, lower highs, it should be making a lower low and smashing through this target, to be fair. That's what it really should be doing. So this is a good old target to have. And when the market comes there, I can move my stop loss up, or I can watch it and look at the market structure to see if it breaks against me. And really, it should be going past it. But right now, I'm not magnificently comfortable with taking a sell from here. Now, what I could do if I'm an advanced trader, if I'm somebody who I understand market structure and I understand, you know, what's going on, I could decide that maybe if I see a break of structure bullishly, that I want to buy and trade the retracement up into these type of levels. However, that wouldn't be a 10 out of 10 out of 10 trade, because I'm actually now selling against a overall energy of the market. This overall energy of the market at the moment, from the information it's shown me, is that it's falling down the stairs. Okay? And therefore, if I wanted to be discerning, I only want to take 10 out of 10 trades. I am only interested when this thing gets back on this red line. When the markets come towards this direction, I'm only interested in getting involved, because I only want to be trading in the direction of the trend. Now, there's lots enticing me and trying to encourage me. For all I know, this might drop all the way down here. Might start going nuts. Like, oh, look, see, we could have taken the trade. Maybe. I'm not trying to say you wouldn't make a trade. I'm not trying to say if you closed your eyes, counted to 5, and just randomly hit buy or sell, you might make some money. I just don't know whether or not that's a strategy that you should go with for the rest of your time trading. I personally think you should say, you know what? If we really wanted to be discerning, we could turn and say, okay, I'm going to watch this trade and I'm going to place an alert before this 50% line. All right, before it, over here. And I'm going to keep an eye on it. It might ring today. Well, let's have a look, see if it's going to ring today. Let's show you how some ways how are some ways which you could find out whether or not your entry is going to trigger today. How are some ways that we could possibly discover that? How are some ways that we could possibly discover whether or not this market could kick back up in here and tap us in?
Set some alarms.
We could set some alarms. Yeah, that's the first thing we could do. We could definitely set some alarms. Okay. You know, what else could we do? Because at the end of the day, if we're here and we're looking at this trade, we're like, okay, we're going to wait till it gets to this 50% mark, which is currently 140 pips away. You know, is this something that, how would we know whether or not this is a today trade or not?
Check your daily average range.
Yeah, we could check our daily average range, because if this market doesn't move on average 150 pips, it's unlikely that you're going to get 150 pips movement from where we currently are, unless there's some compelling news happening in Euro or JPY to get up into this level. So maybe we might say, if we wanted to say that we're only taking 10 out of 10 trades, we're like, listen, I'll check on this tomorrow. Well, I'll place my alert here regardless, but yeah, I don't think I'm going to get my entry tomorrow. Now, you've seen I've placed the alert here. The reason why it's here, over here, and I'm not up here into this red zone, is because obviously over time, this market, you know, as time is going on, this angle is coming down, isn't it? Yeah, so if this decides to take next week, Wednesday, before it gets up in here, well, it's still 50% of the range. Now, if this market just flies up like a missile, well, obviously that's something different. If it just flies up in a missile into this area, but I don't believe it's going to fly up into the missile like a missile into this area. I believe that the market is trying to trade from range to range, ping pong, ping pong. Why do I believe that? Because I see it happening all the time. That's what the market does. I'm not just making it up. The market does ping pong, ping pong. That's what it does. Have a look. Anytime you see the market, it does ping pong, ping pong. That's what it does. So why would it do any different on another day? Yeah. So I'm thinking to myself, the market does want to get to the top end of this range. And if I want to take the top 10 out of 10 trades, that's the trade I'm going to wait for. Now, if I don't want to take a 10 out of 10 trade, and I feel like I can take a 9, I feel like I can take an 8. The 8 right now that might be on the cards today, in my opinion. Now we're at the, look, have a look. Asking them, this question is going back up to Tam because she was so sharp. This impulse coming down here, where are we currently sitting on that impulse? We're currently sitting in what? Sell territory? Or are we currently sitting in buy territory? Well, Tam knows.
Buy territory.
Buy territory. Even though it's ugly, because ultimately we want to be selling it, but it's very difficult for me at the bottom of this range, this green box, and at the bottom of this impulse to be like, yep, I'm ready to sell. It's difficult for me to do that because just on the principle of I want to buy cheap and sell expensive, it's cheap right now. So if I had a box of Air Force Ones that for whatever reason fell to 50 quid and previously they were up here at 150 quid, in what universe am I going to go and try and sell my whole box of 50 quid trainers? Only if something has happened in the world whereby Air Force Ones now send you crazy, send you mad slowly, and everybody knows this, and I think it's going to be consistently falling in price, in value, then maybe I might want to cut my losses. For example, if we're in the stock market and we hear something nuts, I don't know, Elon Musk has just come out and said that, all Teslas are going to blow up and they're dangerous and they're not fit to travel anywhere, and touching the steering wheel gives you cancer. And he says something mad. Yeah? Well, at that point in time, you might be like, rah, this thing might go to zero. It might just completely dump. This has cut my losses. But more times out of 10, that's not happening in the world. More times out of 10, these markets are trying to balance and they're trying to move in a way which is, that you can handle. You understand what I'm saying? More times out of 10, they're trying to move in a way that you can handle. Move in a way that the traders orders can get filled and executed. All right? So like I said to you, right now, if I was to drop down my time frame, have a look. The trade that we're not going to take would be us sitting here and waiting for some sort of break or structure, which, because of that quick push down, it's difficult to see any structure in here. I can, because I read each candle individually, and you can do so also. And what do I mean by that? I mean this. Even though we can't see the up, down of multiple candle formations making these waves, all right? At the moment, this is the structure that we have, something going on like this. And not even that, because it's accelerated. The market's accelerated into an area that also, normally when I see things accelerate into an area, it's like it wants to go in the opposite direction, okay? But either way, in this impulse where it's accelerated here, it's difficult to see any structure to make a decision on this 5-minute time frame, all right? But if I drop my time frame down, which I don't advise people to be trading on, less than the 5-minute time frame if you're not comfortable with market structure and price action, but then it does become clear and you can see some better structure. And that better structure would be the market trading within this range here. I'm going to make it a different color. Now, once again, I'm not trying to say we should take this trade. Yeah, I'm saying if I was to take this trade, this market's going to have to do a few things. Can somebody name one of the things that this market needs to do for me personally before I'm going to start getting involved? I'm going to drop this down into the 30 seconds just so we can see even better structure. Okay. It's some things that this market's going to have to do for me. Can we name some of the things that I'm interested in it doing?
Give an indication.
Give an indication. And what do we mean by giving an indication of what it wants to do? What do we mean by that? What do we mean by that?
Either going up or down with strength and speed.
Well, that's something else. That's not what we mean by an indication, because an indication is just a break of structure in a direction. The first break of structure. So when the market's doing this, have a look. This is an indication of where it might want to go. Then afterwards, we see the C, which is a correction. Normally back to the place of where it broke. We went extensively into this theory, speaking about army, speaking about, there was troops here previously that when price came up here, they slapped the troops down. And then they must have rallied together and brought in all the big guns, the big Chinooks, the helicopters, the grenades to push past this force. Smash. Now, when we smash past this force, Brenda is in the army and she is, wise. And she's like, listen, guys, even though we smashed past it, I don't think we got everybody. And we might have left some of our own troops behind. There were some buildings I saw here, some tunnels. So Brenda always likes to make sure she convinces the whole army to turn around and come back and check this area where we broke structure to collect our wounded and to make sure that we completely cleared out all of the enemy. That would be the correction. And then we're waiting to see a continuation that we're able to get in an entry here if we're bad enough. Okay. Or we wait till structure breaks this level once again to give us a real confirmation that that's where we're going, and then we can get in here with our stops below the lows. All right, so that will be the continuation. Indication, correction, continuation. Indication, correction, continuation. The market does it all the time, okay? But for me, there's a few things that I would like to see. I'd like to first to see, yes, an indication, which is ultimately a break of structure, okay? And to be fair, I'm on such a small structure, I want it to break swing structure within this small structure. Now, what is swing structure within a range? It's the areas that touch the top or the bottom of the line. That would be your swing, that would be your little mountain top. So ultimately right now, I'd like to see this structure break, and I'd like to see the people to stop wearing straight jeans. So we're wearing straight jeans in here. I want to see the trend, the price breaking outside of this trend, trying to break free of those straight jeans. Yeah? Trying to free the groin area, putting on some baggy jeans. So as you see this market breaking outside of here now, I'd like to see this market start to break some structure. Now look, there is 30-second structure. There's structure here. There's structure here. I'm just showing this as an example because I already said this isn't necessarily a trade that we want to take. But I'm just saying to you, these are things that I'll be waiting for and looking for before I get involved. Now on the 30-second time frame and the 1 minute time frame, anything less than a 5 minute time frame, the problem is that it's so windy down there that it's difficult to simply take this structure. This structure has less value. Why does it have less value? Because the 30 seconds got to respect 1 minute value. 1 minute's got to respect 3 minute value. 3 minutes got to respect. It's at the bottom of the pile. It's the smallest guy in the room. So he may be tough around his other small guys, but as soon as he starts stepping up to this guy or this guy, like 5 minute structures up here, 5 minute swing structure. You understand? Like this 30-second structure doesn't hold no weight on, everything above it. On these little 1 minute, like I said, I've identified some little 1 minute highs because there is 1 minute structure. Oh, sorry, that was 30-second structure. But this one here, more than anything, might be more of a trigger point. So ultimately, A, I want to see price breaking outside the market. B, I want to see an indication by breaking a swing level. Then potentially I want to see a correction, closing some sort of imbalance. If I'm wicked and bad, I have the ability to get in on the continuation if I can see a breaking structure. But this time frame is so so small that I'll have to wait till I close back above here. And then maybe then I may decide to get involved in this trade with my stop below the swing low, on the basis that this retracement trade may be pushing up to equal high structure, and as we identified on a lot higher time frame, maybe trying to ultimately get up to this 50% level. Whether that happens today or whether that happens, probably I don't know. We need to check how much EJ moves on the daily range. Maybe this is what this market's coming back up into these levels. Okay, and first and foremost, the first level that I'll be looking at, have a look, would be the level of this impulse. This range that it's been trading in is the first real barrier that I need to get through. This is why I drew that extra range in. Look, have a look. I drew this extra impulse in here because we are trading within, even though we're breaking outside of this smaller jeans, this bigger trend is hooded jumpers. And we are still wearing hooded jumpers in this range. So if I'm thinking to myself, we're going to get to this bigger 50% range, this breaking outside of this trend is another milestone. So do you see how just by understanding and seeing what time frame you're getting in, what trend you're in, gives you everything you need in regards to where your targets are, where you should be, taking your... Look, when this market gets up to this area here, once again, we're in sell territory and I'm in it for the buy from down here. But we're now back into sell territory. So I'm nervous, yo. I'm nervous that this market's going to go like this. And then all my profits here, gets eaten. So I'm nervous. Because ultimately, when it gets to that level, what I'm hoping for this point here was the actual point that it wants to turn around. But remember, this is just a line I draw on my trading view. I don't know if that point right here was the point that it was deep enough into that demand area. I don't know if it wants to do this and then get a little bit deeper in here. And then decide it wants to go up. I don't know. But what I do know is if it kicks back all the way over here, my stop's over here, I'm going to get stopped out. So if I was to get in some trade here on the 30-second time from 1 minute time when he broke structure, I've got to respect that up here, which more than likely is going to be below this level. Have a look. Let me show you something. More than likely is going to be below this level. So you see this level of consolidation where this market was just consolidating. Let me change all of this stuff. Let me get rid of that. Let me get rid of, where's the colors at? Yeah, let me get rid of that. Where's the fill? Am I gone mad? Where's the fill? I can't see the fill. Can't see the fill for some reason. There you go. Yeah. More than likely, it's going to be kind of around this area would be a target for me, because this is an area where structure was broken through after being dancing there for so much time, and the soldiers holding up the good fight, the good battle. They was all here. Have a look at the soldiers. All the little troops were in here. Look, we are not letting. Whoops. Let me do this. We are not letting anybody get past us here. And the market was knocking and knocking and knocking. And man said, you know what, let's stop ramping. Yeah. And brought in the big guns. Drone attack. Went nuts over here. Smashed through that level with, in this relative time frame, strength and speed. Look at that big candle. Bang! Broke through that level. Actually leaving some imbalance in between here and here. I don't think that's the wick gone in there, I'm not too sure. Okay, let's have a look quickly. Yeah, leaving some imbalance in here. So when this market starts to wriggle back up in here, because look, more than likely it's not going to wriggle up like a missile, it's going to start doing this. Whoops. It's going to start doing this, more than likely. It's very possible that, look, boom, that happens. And then we may see a reaction, and maybe if this is the place that is turning around, that reaction might only tap down in here, maybe 50% of this impulse. Have a look. I'm just showing you how these markets have a tendency to move and how I can read them. Maybe it does that, has a reaction that you could have sold from here, yes, but if the market was changing its idea, then maybe we might see that happen. And hopefully then we're going to go on to that larger 50% level. But this is how I'm reading the charts. I'm making a story, a narrative. I do not want to get in for this sell right now, especially after all of these big red candles and we're in an area, 2 areas of demand. This, more say like a 7 out of 10 retracement trade, is a lot more tasty as a buy than it is for a sell at this stage. Okay, so I just hope you understand that. That breakdowns. Anybody not understanding, want me to explain something, or is a bit, wants me to explain something like to them? Does anybody not get it something? There's a way you could get into the sell right now. Shall I show you how? Like this. I'm entering now because we broke this structure over here, and I'm placing my stop above that high. Could do that. I don't know whether or not you want to put a 335 pip stop in. Yeah, especially when this market has ultimately been, well, yeah, maybe, this is the bottom end here. This market could go all the way down to this level down here and still be bullish. Yeah, what do I mean by that? I mean that this market is allowed to go all the way down here and then turn around here, and it would still be a bullish market, making higher highs and higher lows and higher highs and higher lows. So yeah, it could do. But I just don't know whether or not you just want to hit the button for 335 pips when you're at the bottom of the range. Meaning that potentially you're going to spend the next week, possibly, in drawdown. Who wants to do that? I don't want to do that. I don't want to do that. Now, if we get some more data point comes out, some more data happens, and this market does this, boom, and then retraces up into here. Well, then that's different now, because now we've got new data points, and now this angle will look like this. Do you get what I'm saying? But I can't make that judgment and say that's, the new angle of incidence, and this is area that's cheap or expensive, without seeing that data point. Guys, our GU is moving. Let's have a quick look at the GU. This is what we was trading. I said my bias is still bearish. And ultimately, have a look. You know, and someone's saying, look, Jay, we could have traded it from in there, man. Look. Yeah, we could have, would have, should have. Yeah, because when we hit the button over here, thinking to ourselves, yeah, we're going to break out. Look, we broke structure, we retraced. Have a look. This is why we don't trade the trade for the middle of the range. All right. And someone's kicking themselves saying, oh my gosh, I took this trade, bro. I'm happy for you. First and foremost is this. If anywhere we wanted to sell from, it would have been where, guys? Tell me. If for argument's sake, we was really, gun was to our head, where is it that we wanted to sell from?
Top of the range.
Top of the range.
Top of the range.
Yeah, but ultimately, this was in a bigger range that we didn't want to get involved in too tough. Look, selling from down here would have been dumb because we'd be at the bottom of the range. But if we was looking at this bigger range here, the market broke, retraced, closed down below, but we're in the middle of the range, so you can't trust it. Because it broke, retraced, closed down below, then it went, oh, only playing, came back up here, stopped everybody out. Okay, now we've seen a big push over there, and yes, it'd be great. It was like, oh, if we was in that trade, Jay, we would have caught a quick 45 pips. I would have passed my challenge and blah, 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 and blah, blah, blah. I hear you. But ultimately, that was luck. And now we're at the bottom of the range. Ultimately, this is an area that we'd be interested in doing what from if we was trading the range. If we was trading this consolidation range, what would we be looking for at the bottom of this range?
I just want to say that you was actually inside my head and it hurts.
Yeah, go and explain that, elaborate.
I mean, I literally was thinking the whole process that you just said, like literally, like and doing the funded challenge at the same time. Literally, you couldn't have been more inside my head. Put it that way.
There you go. You understand what I'm saying? Yeah. So at this point in time,
but saying that I'm still 4% up, so we cool.
You're still 4% up.
Yeah.
All good. That's where we're supposed to be at. So right now, although, you know, like I said to you, we're here in this area of this bottom of the range, I don't want to trade this consolidation because my overall bias is I'm bearish on this market. I want to be in for the sell. The market is a bullish market at the moment, and here is an area, especially as have a look here, we're kind of around that 50% area. I'm not gonna lie to you, in here where the market's tapped in a few times, but you know, like I said, would prefer to get involved in this trade as and when we break outside of that blue box. I'm still sticking with that. Yeah. Yes, it would have been, you know, hunky-dory got in here, but you know, don't worry about that. As and when we break outside of this box is when I'll be interested to get in. Look, let's zoom out. We've been zoomed in for some time. Now, like I said, this market has definitely been making higher highs and higher lows. Like the market right now is trading within this range between here and here, but the market is still bullish, coming from making higher highs, higher lows, higher highs, higher lows on this 15-minute time frame. Okay, now we try not to just, you know, pick the top or the bottom. That's not we don't try and do that. So ultimately, like I said, this market, I'm gonna say out loud, is a bullish market. Therefore, you should be looking for buys. I just feel, based upon the market structure, this larger energy of this market, that this market, I want to be in here for the sun. Now, the market could decide to go all the way back up to this line for an additional 250 pips. It could do. And there could be fundamental reasons why this market has got so bullish, why USD has either lost strength or GBP has gained strength. All right, which is maybe throwing our technicals where we thought we was going to turn around 50% of the area. Now we're at 618. Okay, a bit out of the water. Okay, so for me personally, I want to get some sort of confirmation. I want to get some sort of confirmation of what's going on. And in my opinion, this is the hour time frame. Have a look. The market was on this hour time frame pushing up like this bullishly, and then it's broken that bullish level, not quite closed below on the hour time frame. This is a wickage. Closed below these levels, not quite closed below here, which is always concerning. But we made a retracement, which was a lower high, and now I think it's fair to say we've closed below this hour structure. So for all purposes, this market does seem a little bit like it's ready to maybe rock and roll in this direction, but we don't know. So I'd like to see this market right now, like I said, break outside of this blue box, yeah, maybe tap down into some sort of area down. We don't know how far it might break down. It might push all the way down into here, and someone say, no, we should have sold it. Yeah, you should have, would have, could have, maybe. All right. And then I'd like to see this market make some sort of retracement, maybe close this imbalance. We can see a huge 1 hour imbalance that's just formed in here. Have a look. Yeah, you can see huge 1 hour imbalance in here. Okay, we can also, if we drop our time frame, we'll see smaller imbalances. Look at the 15-minute time frame. All this here is imbalance on the 15-minute time frame in here. So we're going to see some sort of retracement in here. And how would I know when I could possibly? So that would be this may be when we break outside of this level. We broke outside this level here, but it'd be nice if we break past this level here. Boom, the indication of where we want to go. And then after the indication, what we waiting for? What are we waiting for after the indication of this market potentially doing this? What are we waiting for?
Correction.
A correction that might correct into these levels of where? Where might it be correcting into?
50% of the range.
Maybe 50%, but that wasn't what I was fishing for.
Imbalances.
Imbalance. Yeah? Fishing for in the imbalance. Okay? You see, when we start dealing with 50% of the ranges, guys, it works a lot better when the market is trending. You understand? Think about a stairs. When you're walking down the stairs, you drop a ball down the stairs. It doesn't bounce back up to your hand. It probably bounces 50% of the way, and then it falls down 1 meter and then bounces back up half a meter, and then falls down 1 meter and then bounces back half a meter. Do you understand? When that stairs is going downstairs. You understand what I'm saying? That's not necessarily the case if the stairs wasn't going at that angle. So I want this to break outside of here. This is more say we're going to break, see a retracement back into a level of where it broke, all right? Where it broke past the army, and it might stop here, this first 1 hour imbalance, because we had this little wicked scenario. It might decide it wants to come and wick up in this level here. Either way, I'm not just going to hit the button when it goes up there. I'm going to wait to see some confirmation, yeah, of that market breaking structure on a smaller time frame, making the indication, making the correction, making the continuation, and then I may be able to get involved in that trade and get an early entry up in here, trading directly down to here. All right, it was my first target, but ultimately should surpass there, because this was the indication of where it wanted to go, which, like I said, I don't know where it's gone yet because it hasn't stopped. Then the correction should ultimately surpass the place of where it went to. Okay, but my target would be that equal low. Okay, now, like I said to you, right now, though I've drawn this little orange angle in here, this market is been consolidated. Within the consolidation between this point here and this low here, the market has been trading, yes, with bullish and bearish and bullish on a smaller time frame, but this is the box. So I want to see it break outside that box and do something. Okay, now remember, until this market breaks this level here, still a bullish market. Until this market breaks this level here, it is still a bullish market, making higher highs and higher lows and higher highs and a potential higher low. All right, so this is what we have to be cautious of. We are still in this bullish market on an hour time frame and on the 4 hour time frame and on the daily time frame. We are, but I'm just conscious of the fact that I think that maybe now might be a time the market may reverse. If I wanted to get confirmation of that reversal, I want to at least start seeing hour or 4 hour breaks of structure. I'm not going to get a 4 hour break of structure anytime soon, because the 4 hour structure is ultimately down in here. But from a 1 hour perspective, a first bit of minor 1 hour structure has been broken in here. All right. Well, it should be broken, but kind of broken, yeah, here. Yeah, or maybe we wait for a better break, but ultimately, yeah. So that's giving me a little bit more confidence that maybe we're turning the boat. What else do I want to see? I want to see the bot price breaking outside of the market. Stop wearing baggy jeans. I want to see straight jeans now. Something different. So when I see that happen and this happen, this would be more of a confirmation for me on a larger time frame. On a larger time frame that maybe this market is this breaking this structure over here. Yeah, and then this breaking this structure here, and then doing this, and then doing this, is more of a confirmation that that boat has turned around because it's broken this major structure, which is 4-hour structure. At the moment, the market is still trading within this range. Even if there may be opportunities to get in when this retraces and trade it back down into these levels, it could just go, we still bullish. Could do. But at the moment, we're getting good signs. All right? We're getting good signs at the moment. Cool. So I'm going to leave that. Right now, the market's done is over here. It hasn't pushed magnificently out of there. But what I am going to do is watch. I'm going to pop an alert in here. Why there? Why am I going to pop that alert there? Because that is just at the bottom of a little bit of a resistance down here. When I say resistance, I'm talking about in a military term. Oh yeah, of possibly there were some troops around this area. Okay, now the market might decide it wants to push all the way back up into here, into some imbalances in here, some imbalances in here. Yeah, may do. But I want to get an alert when it comes back into the area of where the battlefield was, because there was a battlefield here. The price was falling down here to hell, and then boom, the battle ensued, and they said, move and go about your business. And then it came back up here, it mustered its energy. It said, nah, man, we're not going back no more. We've had enough of this oppression. But listen, bring your brothers, your sisters, your uncles, your cousins, grab sticks, grab stones, yeah? Plus, I'm going to call in a favor. My brethren's got a helicopter, and we're going for it. And it went, okay, let's go. And it came back to the battlefield and went, and made its way through this level, through this area here. But when it comes to clear, remember Brenda is this, she's the voice of reason, and she decides to come back up in here. She might say, listen guys, we've been under this oppression for so long. I really think we need to go and clear and look in all of these houses in here, because there may have been some of those troops, some of those previous combatants. Yeah, they might be hiding in this house in here, in this imbalance, or maybe they're hiding over here in this imbalance, or maybe they're hiding all the way where we they've decided to double back in here. So for all, Brenda might be, no, I'm not taking no chances. I'm going all the way back up into this here and having a look at what's going on. And then she might say, okay, yeah, I'm happy, and decide. I don't know. I've mapped out the actual battlefield. Mapped out the battlefield where definitely there was a battle in here, but we don't know when this retraces where it wants to go back to. So I'm going to be conscious of that. And I'll be waiting before I got in on a sell to see a clear break of structure on a decent time frame. Let's say at least a 5-minute break, retracement, break again. Okay. And I'm going to identify all of these imbalances. You can do it yourself by eye, or you could use this indicator that I've shown you guys about, which is just called a fair value gap indicator. And as you can see here, as you can see here, I wonder if I could do this. If I can hide all my things. Does this still work when I do that? Yeah, can you see? It's doing it for me. Showing me all of these imbalances on the 5-minute time frame. Imbalances. So the market could come up just to this one and be happy over here because this is where the battlefield is. Maybe Brenda's a little bit relaxed and she doesn't want to go back up in here. And she starts turning around here. Or she might say, nah, man, we need to check out this little block over here. Or we might have to check out D block over here and really see what's going on. We don't know. But we can read and react. Because if you was to take this trade, anybody would turn around and say to you that wherever you take this trade anyway, you should be placing your stop above this swing high. So, ultimately, if you was doing that, it would probably be more in your interest that the market goes all the way up here. Because you can place your stop above this swing high and you're getting a much better entry than if, for argument's sake, it was down here. Now, if you take a more aggressive trade, you might decide to place your stop above the high of when the market starts to turn around. All right, and that's fine, but you still do run the risk of Brenda going, watch Brenda, you watching her? Sorry, Brenda, I know I always use you. Brenda's gonna start coming down here after you got that entry. She's gonna say, you know what, guys, I got a funny feeling, you know, I really think we should go and look at D block. And then the market could go, are you happy now, Brenda? There's nobody here, we've killed everybody, and then go. That's the risk you run of turning around and taking that entry here after it breaks, knowing that there is imbalances above. Now that's fine. Maybe you're happy with that because you're just risking $100 saying if you get stopped at $100 is cool. You're gonna go and take another $100 trade over there. No problem. Maybe you've got the time to be at your computer to take another entry. But if not, that's where you place your stop. Spread times 2 above some sort of imbalance over there. And you enter here and you'll go into some drawdown, but then the market will and start going in your direction. All right, this is trading, guys. It's about probabilities and trying to find high probability setups because, you know, one thing I was listening to the other day by you're trading in the zone, homie, Mark Douglas, okay? Is that when you place a trade, it's nothing to do with whether you're wrong or right. It's just to do with whether you've taken a high probability trade and whether or not other people in the markets agree with you. Because when other people in the markets agree with you that this is an area whereby it's good to sell from, then the sales start piling in here. The orders start piling in here. All right? And then that drives your trade down. And if you understand that, you know, the markets are completely out of your hands and to do in other people's hands, you know what that makes you do? It makes you manage your risk. Because a lot of people take trades on the basis that they think the market's in their hands. They over leverage, they do a madness, but the market's not in your hands. So why would you ever do that? You'd never do that in real life. In real life, you know, I said, yeah, bro, I'm driving out, you know, in my car at 150 miles per hour. You know, why don't you put your whole family in the car? You, your kids, your mom, your dad, your auntie Jackie, everybody. Why don't you put them all in the car? You'd be like, bro, I'm not risking my whole family in your hands behind the wheel of a car that, you know, you haven't even got serviced recently. I'll jump in, yeah, because, you know, I know you're my homie and you can drive, but I'm not putting all my kids in here, bro. But when it comes to trading, we don't do that. We just be like, yeah, there's a trade right now. This is a lovely zone. Let me just over leverage. Let me put the kids in. Let me put, you know, Mrs.'s mum in there because, you know, I really like her as well. Put them all in there. And then when we hit stop loss, oh my God, we hit stop loss, we over leverage. We only meant to lose $100 and we lost 500. Man, I'm like, so why did you ape into that position, bro? What made you think to yourself that position was any more in your hands than you jumping in? Like, it's not in your hands, right? And that kind of psychology will help you manage your risk, guys, because the strategy itself just makes sense. It's basic. Let's go to another one real quick. It's time. Let's go to another one real quick. Let's go and have a look at something random. Say random, because maybe people don't trade it commonly. All right, BTC, USD, have a look. Let's go. Let's have a look. Let's see what I can. All right. I'm not going to do here's one I made earlier. We're going to delete everything. All right. We're going to zoom all the way out on Bitcoin and see what's going on. All right. We draw some lines. How? I think we can agree with that line. I think that's a nice line to start with. All right. Now, on the other end of this line, I'm going to do this. It's this line here that makes people think that Bitcoin is going to 100,000. Look, here's 100,000. It's this line down here that is why people are telling you right now that this is the start of the crypto bull run again. Because even on a monthly, I'm on a monthly, every candle is a month, all right? Even on the monthly, Bitcoin has given us indication, correction, and continuation. Because look, here was some previous structure, all right? As this market, look, have a look. If I was to draw a little line in there so you can understand what I'm saying. Look at the line. It's like so. It's like so. And Bitcoin has indication, correction, continuation. For all purposes, Bitcoin is saying to us that I am going up, homie. Let's have a look at this as well. Look. Have a look at this. Oh, all the way to the tip here. Where did the retracement come to? Around our 50% area. Get it pushed up. Boom, 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 boom. Now, the concerns are, is Bitcoin just coming up here to fill this imbalance? And are we going to, no, in fact, sorry, let me do this. This is the concerns right now. Tam's on the call and she's been very good at this. Should we buy Bitcoin now? Is now the best time to potentially buy Bitcoin? I don't know. I don't think so. Who said that?
Tony T.
Yeah. I don't know whether or not, even though Bitcoin does look like the overall, energy is bullish now because it's broken structure. And Dad, I'm not trying to say that this market couldn't just shoot up here and do something. It could do. There could be some fundamental stuff that might happen and it just went mad and just completely changes this angle that is trading within.
The only reason why I say that as well is because when you see the how far it goes up, and you treat that as an Elliott wave, and then you look at the correction on the monthly, and you look at the size, how big a size of a correction it can have, this could exactly be that. It just looks like another ABC retracement to then do another ABC going down, and it could do that for as long as it likes, really.
Yeah, so the way if you're talking Elliott waves, the way Elliott waves theory is about a 5-point extension, or sometimes it's even a 7-point extension, and a 3-point ABC retracement. All right, so that's why you see this as default. This tool comes as 1 to 5 because it's kind of like this. If I can try and see it, and it's subjective. Okay, it's subjective. All right, so maybe it's something like 1, 2, 3, 4, 5. Now they normally say the second to third leg is the longest leg, hence the reason why I drew it like that. Okay, and then afterwards they have this look. That's why this tool comes as A to C as standard. Something called an A, B, C retracement. Okay, that's if you're talking Elliott waves. Yeah, I mean, cool, whatever. They're all the same thing. You understand what I'm saying? Like I said to you, all different strategies are the same strategies. There's one God. That's how I see it, guys. Call him Allah, call him Jesus, call him whoever you want to call him. Boom, 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 boom. There's one God. Yeah. So however you want to have a relationship with that God, whether it's through Elliott wave, whether it's through ICT, whether it's through supply and demand market structure, whether it's through volume profile, who gives a damn? The bottom line is that you live a clean way of life with a clean heart and do the right things whilst you're living on this planet. I don't think, what gang you're with matters that much. Okay, so the reality is, for me, just on the principle of I want to buy cheap and sell expensive, I'm extremely concerned about hitting the buy button right now. But you know what the dumb money's doing? And you know what the people that I just heard, Bitcoin's rallying. It's time to get back into cryptos, guys. You know what they've done? They've gone into their Coinbase and they've bought Bitcoin. Or they've bought, and the bottom line is us knowing better, understand how to look at these charts. We're like, listen, yeah, definitely, it does look like it's quite interesting, but I'm concerned. Does anyone see any concerns that are just standing out like a sore thumb? Does anybody see any concerns recently?
Yeah, the imbalance.
Yeah, boy. All right, let me put in a little line in here for argument's sake. I'm going to do this. I'm going to make this yellow, and I'm going to do this. I'd be here thinking to myself, yeah, I do want to get involved, but for a start, we're at the top of the range. Secondly, there's a huge imbalance down here, just screaming out to be rebalanced. Screaming out. Yeah? And if I look at that impulse, at the 50% point of that impulse, have a look at this. From down here to up here. Is that a coinky dink? Is that a coinky dink that our 50% level is sitting right in the middle of this imbalance? I don't believe in coincidences. So we may see, in my opinion, and then at this point in time, I'll be saying, what would I be saying here then, Tam? What would I be saying here, Tam? I'll be saying possibly, I'm interested in getting in the sale. Christmas is done. I've scraped together all my shekels, sold the kids on eBay. Yeah. Got a little bit of change together. And now I'll be saying, you know what? I'm possibly interested in investing in Bitcoin because within this trend, Bitcoin was cheap. I don't know about you, But I do not want to go, and I know that Air Force Ones are standardly £100. Just out of principle, I am not going to the shop and paying 180 for them. Because last month, they were £100. They were down here. And the guy says to me, bro, I hear what you're saying, bro. Down here, they were £80. I know, but the price of, Air Force Ones are going up. I'm like, fair enough, bro. I get it. Inflation, man, just like fresh Air Force Ones. I get it. But I'm not buying at 160. Obviously, yeah, it went down to £90. Not buying at 180. I'll take it when it gets to £100 because within that trend of yes, they are getting more expensive. I still want to buy at the best possible price. I don't want to buy it when it's at 180, when it's at the highest it's ever been in the last year. That doesn't make sense. I'm getting mugged. I'm mugging myself. And it's the same in all markets. As much as now, look, have a look. The guys that are looking at it like this, you say, yep, cryptos, I'm in there. Bullish, hanking higher highs, higher lows, I'm in there, hit and buy. That's fine. If you want to hit buy, if you're just investing and you don't mind your money going backwards. But if you're trading with a stop loss, you're looking at it and thinking to yourself, if for me to get in here, my stop has to be below this swing low. And I've got to be willing to sit in this retracement before possibly the market recovering to try and get up into these equal highs. I'm not interested in doing that right now. If anything, I'd be more interested in taking a retracement sell when I see Bitcoin breaking some significant structure, which, have a look. I'm not trying to say it's happening right now, but I'm saying on an hour time frame, look, you've broken this hour low. Haven't quite, it's a bit wicky. I would like to see a nice solid close below it. All right. On a 4-hour time frame, we haven't broken 4-hour structure, which is be down here. All right. But if I do start seeing some other things happening, I'd prefer to be turning around and saying, yeah, I'm going to be getting into a Bitcoin for the sell, at least down to the 50% level. And then I'm going to take all that money that I make. And then when it gets down to the level where I think it's of value, yeah, in these kind of green box down here, yeah, near this 50% line, maybe down here, maybe this is going to be happening Christmas Day. Look at the date. Maybe Christmas Day we're down here and it's time to buy each other gifts of Bitcoin. But right now, yeah, not on it. And that is about market structure and price action. And if you and the market's fractal. So the same way I'm looking at it, it's like this on the weekly and the daily. It's the same thing it does on a 4-hour, on a 1 hour, on a 15-minute. And every single time I want to be asking myself the same question. Do I want to be buying when we're right at the top of a range when I should be selling? Or do I want to be selling when I'm right at the bottom of the range when I should be buying? And if I am going to do that, then my stop has to be outside of the top of that range, because the market trades within the range, and therefore, that's the only place I can place my stop. And this is why you hear people tell and say, I want to trade with the trend, because the trend is supposed to be helping you out. Because when the market kicks back on you, let's imagine that right now, I decide that I want to be in this range here, this yellow range, that I decide that I want to be selling it, okay? Now, the whole point is the market's going up in this range. So if I decide I wanted to be selling it and the market even started coming down here, whee, the point is that the energy is going in this direction, bullish. So I can't fall asleep on that trade. But if this starts to break structure here, no, I'm not, let's tell a lie. On the bigger picture here, let's imagine that I got in here for the buy down here, which is the time when I was actually saying that I should have bought it. Yeah. And I wanted to buy it. All right. I think I did buy some, to be fair. I can fall asleep on this because realistically, even if this market retraces, based upon its larger price action, I should still be good. My stop's going to be down here. If I got in down here, I could still be good. This could still be some long-term position that I took. Because even if that market retraces back and goes for a retracement, I should still be good as the market comes back into our levels, respects that higher low, and decides to start doing this for a higher high. And so on and so forth. Until it decides to do something different. And when it decides to do something different, gives me new data, then I need to then recalculate. But I can't recalculate off of no data. I can't be like, yeah, this is coming down here and breaking structure. I'm going to go down. Based upon what, bro? Based upon what information? What, you had a dream? Like, based upon what? Nobody here can turn and say that this market is not bullish. It is bullish. It is making bullish energy. However, within that range, now's not the best time to jump in. That's it, guys. Guys, good morning. God bless. Yeah, I've got a meeting today. I just realized I'm supposed to be ready. Guys, good morning. God bless. Have an absolutely fantastic day. If you've been watching this on